Global markets are generally in positive territory. Here on the all-share index, we see markets generally up, being driven quite nicely by the financial sector, which was up by over 1%. And basically, I mean, what's driving this is that US jobs number. It came out much better than expected, 313,000 jobs created relative to the expectation of 205,000, so up quite nicely. And what's different with this statistic this time is that the inflation, the wage inflation, is not as high as it was in the last print. And so that's given cause for markets to not have the kind of jitters they had before about the possibility of the Fed ramping up interest rates as much as one would think. But of course, the market has sort of priced in the possibility that 4 interest rate hikes will happen, with one certainly expected to take place this month, up 25 basis points. So we wait to see what happens there. Meanwhile, on the local currency, we see that that has lost a little bit of ground relative to the US dollar. Oil prices have receded slightly, and this is on the back of expectations that we're going to see US inventories climb this week. Let's take a look at the indicators. Well, I'm joined by Bright Khumalo. He's a portfolio manager at Vestact. Thanks for joining us, young man.
Yeah, it's lovely to be here.
Good stuff. US non-farm payroll number much better than expected. And of course, I outlined what those numbers were. How much of that is feeding into market sentiment today and your general assessment of markets?
Yes, so the numbers weren't only just good, they were very good because, you know, they're much higher than what everyone had expected. And what's very interesting also is that the December numbers and the January numbers were revised even higher. And we're seeing that, you know, unemployment number sitting at 4.1%, and the average hours worked per week has gone from like 30 to 34.2 hours a week. So it's very interesting to watch this, and the market obviously reacting very good to the news. We haven't forgotten about the rates hike. I think that's all priced in for the next 18 months. So it's very interesting, you know, what's currently going on in the market. But if you look at the rest of, you know, the world now, not the US, we're still seeing that consumer confidence is coming back, and also as a result, business confidence is also climbing. So there's still a lot of, I think, returns to be seen as a result on the back of, you know, just people feeling better and spending more, and that trickling down to profits.
We know that markets are very fickle, and last week everything was about, oh, trade wars, this fear. And so now, isn't that going to return again today? It's a feel-good factor. Tomorrow, perhaps a little thing happens and then it will come up again.
Yes, but, you know, like, you know, Warren Buffett always says, you know, the market in the short run is just, you know, it's volatility. It's all that is. But in the long term, it's a weighing machine. It's depending on what price you bought for those assets, and you know, you'll see whether it was a good price or a bad price.
My colleague Francis touched on the fact that China, the National People's Congress in China, have decided to dispense with presidential term limits, which means Xi Jinping could be a lifetime president. Now, what, from an investor point of view, what does that mean? Does that make China more or less attractive?
It's a very tricky one to answer, but, you know, all of your investments basically are going to be based on someone's, you know, emotions or how they feel that day. And we've seen this, the more older people get, the more grumpier they get. So it's going to be a very huge determinant of markets going forward. But what's interesting, what China has done there is that they're working with, you know, experts to see if they could actually lower their regulatory requirements to actually include more institutional and personal investors outside of, you know, China. That will help, I think, in terms of stabilizing the prices of the companies there. You know, we always say the more buyers and sellers are there, the more true reflection you get of the share price of that specific company. So, you know, we'll see what the fair value of those businesses are there. I mean, they've got great businesses like Alibaba and Tencent. Alibaba is actually listed outside of China. Maybe they will list in China now, if they lift all of those regulatory requirements.
So you wouldn't get excited and start wanting to dispense of the likes of Alibaba or Tencent because of that particular political change?
Well, politically, I wouldn't shoot from the hip. Yeah.
Okay. All right. And then it's not listed, but of course it's been of huge public interest, this VBS that has basically gone into curatorship. A lot of people, particularly on social media, complaining that, you know, it's a bid to destroy a black bank and all of that. The Reserve Bank coming out and saying, no, actually, these guys are experiencing a liquidity crisis, yes, and we have to intervene to safeguard depositors' funds. What's your view on this? And do you think, given the fact that it was quite a successful black bank, do you think that certain deviations or dispensations could have been made for this bank to be able to continue doing business?
So I haven't been following the bank itself in terms of their success and whatnot. So, but what I know is that 3 years ago they had about 200 million in assets. Now they've got 2 billion. And I mean, if you look at that, that's many folds increase. And obviously they might have done something differently to get there, right? So a good example that I know is that you remember they gave Jacob Zuma a loan, a home loan. And that's, you know, a typical home loan or like a mortgage lender will, you know, give you 20 years to pay back the loan. But these guys, they're mutual banks, so they're not really a mortgage, mortgage lender. So what that means is that if you need your money in 6 months, but you're actually lending it to someone who's going to pay it back in 20 years, it makes no business sense. So there's going to be a cash crunch at some point, and that's what they're currently going through. And in terms of the reaction on social media, I don't know, they're never a true reflection of what's going on out there.
What the facts turn out to be.
Yeah.
And then let's take a look at AVI. This is a company which sells up to 50 brands, and it includes the likes of Spitz and Green Cross. They came out with their interims. Revenue was up a pedestrian 2.3% at 7.3 billion rand, nothing to sniff at there, while the headline earnings per share rose 7.5% to 325.6 cents, and the dividend was up 8% at 175 cents. When you look at this particular stock, which is very consumer facing, your thoughts?
Yeah, so this is a fast-moving consumer goods company. It's a producer, so they have most of their pressures will be on the raw material side of things. Like they import things like palm oil, if there's not enough palm oil locally or for some reason. And obviously a stronger rand is good for them. So, yeah. And you know, you'd want to have a stronger rand as an importer. And you know, from what I've seen from this company is that they actually control their costs exceptionally well. So management is doing great, is going, you know, through great lengths to make sure that their cost base doesn't increase as fast as, you know, food inflation, which is, it's been very impressive. But you know, the revenue has to come from somewhere, and the more we see this consumer confidence that I was talking about previously, it's going to trickle down to the top line of this company and to the bottom line. And if management keeps on, you know, controlling the cost like how they've done, I think they'll be fine. They'll still live to see another day. Another interesting part about you know, this company on the snack side, you know, baking goods and all that stuff, you need a lot of butter, and we've seen a butter shortage, you know, globally, and that has hit the company somewhat. But I don't think it's that big because they're a well-diversified business. Okay. And you know, I always laugh at this every time I have to say it. The Kavela, you know, it's still roaring forward for this business. Who knew? And Kurt Geiger.
Indeed, indeed. Yeah. All right, well, we're going to leave it there. Thank you very much for your time. As always, Bright Khumalo, he's a portfolio manager at Vestact. After a short break, Francis with more business news for you.